Okay, guys, breaking this down. The reason I have a random line at this point, which K asked, is because the market found a bearish candle and a bullish candle. This indicates the market found some type of support right here. But my random lines are based off of my wicks. My random lines are not based off of my candle closes, because if I'm basing it off of my candle closes, then I could have this as a daily level, but I'm going off of my wicks. As you can see, I have a wick rejection right here, bringing it over. Even if price was over here, if I brought it over here, I had a wick right here, wick right here, wick right here, wick right here, wick right here. Price came down, wicked down right here, wick down right here, wick down right here. The market is touching straight wicks. So that's why
it's like, to give you an idea, like, okay, when it gets into that little area right there, just know that it's some type of support.
No, when it gets to that area, it can be choppy. You see what I'm saying? When the market comes down to that area, shit can be choppy. Like, the market can do stuff like this. Look, this is straight. This right here is straight seller's rejection. This right here is seller's rejection, seller's rejection. So the market is doing things in order for, individuals to get confused. Like, new traders, they're getting confused. Even traders who've been trading for years, they're getting confused because they're not paying attention to what's going on the higher time frame. They're paying attention to wherever time frame they're on, and they're not going back to back to back to back to see what's going on. So remember I was like, structure was never broken on the 4-hour time frame. On the daily time frame, this is all indecision, bro. It's going sideways. Literally, the market did not even form any type of candle saying price wanted to go anywhere. Look at this right here. You have a bearish pin bar. Second. And that's why it's so major to understand and know your candles, bro. Like, knowing these candle patterns, that shit is everything. Because it's everything, because when you understand what the market is doing, then you won't be so confused. Right here, that's a bearish pin bar. This candle tells me right here, it says buyers tried to push the price up, sellers stepped in, said no, no, no. We closed as a bearish candle. This is a bearish pin bar. After that, we could go to the lower time frame. We maintaining our order off of the lower time frame anyway. We understand on the lower time frame, structure was never even broken. Remember? So let me go back. Structure was never broken on this lower time frame. And all I'm doing is tying everything together, putting it all together in order for it to be one big system, to where I can understand this big system and I can understand what's going on or whatever the story is telling me. Once we got that price rejection, understand that a pin bar, and Ghost taught me this, a pin bar on a higher time frame, on a lower time frame, it's an engulfing pattern. So this was that pin bar right here. Literally, that engulfing was a pin bar. So this told me right here, remember, we already took entry up here, we took entry over here, and now, even if we were on a lower time frame, we could have took another entry. But even with being on a higher time frame, this tells me right here, this setup or this close tells me price wants to be pushed down. The price isn't showing me anything with no, it wanted to do any type of retrace, nothing. So I'm just tying everything together. As you can see, I broke it down from, being up here to being, to being down here, and price shot down. Like, you can measure, even if we wanted to, take small, from right here to right here is 50 pips. From right here to right here is 135 pips. To the close of that bearish candle is 146 pips. The price is still dropping. That's 200 pips, 300 pips right here to this point, to that red box. Remember, our main goal is to get a new lower low. Our goal is from our daily time frame. The reason I'm breaking this setup down is from my daily time frame. I started from the daily time frame. You see what I'm saying? Yeah, from the daily time frame, from up top. So I see the market.
Yeah, so because like you saw on the daily time frame that it made that
it broke structure. It broke structure. Yeah.
And so that's when it tipped the alarm, like, okay, let's start finding some sellers that are getting in control.
No, not even let's find sellers. Let's find some type of setup that tells me sellers are in control. Don't ever try to force the market saying sellers are in control. Find the potential setup saying sellers are now in control. But remember, whenever you get your lower low, don't try to force saying, okay, the market is now at a lower high point. Let the market tell you where it's at. You see what I'm saying? So, Kay, you want to analyze current price. Current price, where we're at, we can pull our fibs from point A, point B, that's 23.6. So current prices, we still have a 23.6 retracement close. We have a touch of 38.2. So I could have analyzed this. I actually took this setup down. to the downside. So I'm gonna analyze this for y'all. So where we're currently at, we're at a monthly level of resistance. As you guys can see, this level, which is now my resistance point, it was a level of support. Support was broken. And as you see, price tried to come back and form some type of retracement, but price could not break past this level of resistance. So understanding that I'm at a level of resistance, I can be on my 4-hour time frame even before I'm getting, me and Ghost actually took this setup, both of us. We were analyzing this last week. But we understand that, we're at a monthly level of resistance. We're still in an overall downtrend. Yeah, you see higher high, higher low, higher high, higher low. You see that on this time frame, but always understand and know the bigger picture of, where you're actually at. So what I can do here is say, boom, or not even say, I see. Okay, I got price rejection right here. This is buyer's exhaustion. Better yet, market end up retracing all the way from down here to up here. So we were still in structure at this point. And the reason I say we were still in structure, pulling my fibs out, point A to point B, this 100% point, it was never broken. So a lot of people, a lot of traders, you know what they would have been doing right here? They would have been buying. As soon as price got rejected, boom, stop losses hit. Because they're not understanding where we're actually at in structure. We are actually still in an overall downtrend from my daily time frame. We're just at some type of high point, lower high point. So I can understand now that having 100% retracement, I bet. So this is what I'm gonna do. I got a bearish engulfing pattern. Right here. And the reason I'm gonna do it at this bearish engulfing pattern right here is because I see price got rejected at this point right here. Price got rejected. I more than likely end up taking some sales to where, I tried to take it to the down. I really have to break it down to the lower time frame. But the reason I'm going to do this one is because I got a double top. I see that I have a double top. So with me having a double top, I understand that, price came up, rejected, price came up again, we got rejected again. So understanding on my 4-hour time frame that we're at a monthly level of, resistance, drop to my 30 minutes. And the reason I go from my 4-hour to my 30-minute is because, my entry time frames are 30-minute, 15-minute, 5-minute, and potentially 1 minute if I have a setup. I have enough confirmations to get down to that lower time frame. But I go from 4-hour to 30 minutes.
Oh, so okay. So the reason why you jump straight to your entry time frame because of that candlestick pattern you saw in the 4-hour. So there was no need to go to 1 hour or 2 hour, like to keep looking at stuff. Like you already see
it wasn't no point. So
yeah, you already see your candlestick pattern.
Once you have your confirmation, all you're looking for is a transition now. And when I say a transition, you're looking for the break of structure on the lower time frame, retest. At that retest, take entry. You see what I'm saying? This was my break of structure right here. Look at this time frame. I have a higher high, minor. But I understand all this right here was that other bearish engulfing. Remember I said it formed a double top?
Yeah.
So I can understand now this is my higher low point. This level of support right here, that was broken. Once it broke, now it's time to see what we're going to do. So it's a waiting game. So you can pull your fibs out from point A. The market found support right here. We trying to measure this retracement. That ain't nothing.
So when it broke, you just let price break and let it find support somewhere and then fib it.
Yeah, no, let the market. What I do, I let it find support, but I'm basing my fibs off of my wicks, my highest and my lowest point. So the reason I put it to this point right here is because the market did some type of retrace right there. We're only measuring the retrace. And the reason I say we're measuring the retrace is because 23.6 is those are considered consolidation continuation. So as you can see right here, this is 23.6. The market went sideways. It didn't tell you where it wanted to go, but just because we got this push right here, which is a 38.2 push, that doesn't mean structure was broken right here. You see what I'm saying? Structure wasn't broken. This is my actual PRZ. This is my actual price reversal zone that tells me, or that can tell me sellers are now in the market.
So if it consolidates, you see how like before it went up to that 38, but it was consolidating on that 23. That part right there, I'd have been thinking it was ready to go down.
Bro, it's all a thinking game, bro. You got to go off of what you think. And I'm the way I'm breaking stuff down, it sounds good, but shit, in reality, I lose trades. But remember when we first was on the webinar that we was just on before this one, and you were like, sometimes you could get like, remember I said price can do something and then shoot back up and take all the stops out. Remember, if you have your stop loss above this point, that happened to me right here, bro. I have I took entry right here. I took entry at this point right here, but I understand where I'm at in structure. So it wasn't a loss. It was just the market had its manipulation point.
So that 23 point that I said that I would have thought it could have been ready to. That's still a good probability. It just depends on what probability you want to take.
I mean, you got to go off of confirmations also. So with you being at this point, say you took an entry off this candle right here, this bearish candle close, because anywhere before that you didn't have any confirmation saying sellers are now in control of the market. You didn't have nothing saying that. So the reason I would have took entry off this point is because I see it engulfed all these candles over here. So yeah, more than likely I would end up taking this bearish candle right here. Boom, take that bearish candle. You see, you would have went into some type of profit. But remember, this is a 23.6. This isn't a valid price reversal zone, so you would have went straight into drawdown. So with you being into drawdown, unless depending on where you had your stop loss at, like most traders, they try and put their stop losses above their high point. When shit, in reality, look, even having my stop loss right here. If I would have had my stop loss right here, looking to my right, look what happened. Stopped out, boom, went my way. You know what I'm saying? So you got to base your stop loss off that 100% retracement. So you understand on the higher time frame, or even, it just all depends on the setup, honestly, bro. It all depends on the setup. That's what everything really depends off of. So right here, I end up taking this setup because I have a bearish variation. This one volatile bearish candle engulfed all these bullish candles over here. So I took entry, boom, took entry. Shit, we went into consolidation. Looking to my left, we're at some type of level of support. We're in consolidation. The market went up. I got stopped out because my stop loss was above this point. Other than going off of what I know with having that my 100% retracement, I'm just trying to do different shit. I'm not gonna say different shit, but trying to have a low risk trade as possible. When, truth be told, these brokers, they see everybody's stop losses. They see where everybody's stop losses are at. So the market got manipulated down here. It couldn't break this level of support, and we got to push up to the upside. Once we got this push to the upside, bro, it just took all the stops out. And then once everybody's stops got hit, you got a bearish engulfing pattern. At that bearish engulfing pattern, that told you sellers are now in control of the market. Boom, that could have been entry, right?
That's why it's good to always put your stop loss at that 100% retracement.
100, no, not 100%, 110 or 120%. That's how I usually do it. So this setup right here, I end up taking this down because I got this bear. I got stopped out, but I'm still analyzing, seeing like, damn, okay, are we gonna get a break of structure? Are we gonna actually break structure? Because I understood that this wasn't a break of structure. This didn't break structure yet because we got this price rejection. Once we got that, I took another entry at that bearish engulfing pattern. And as you can see, the market ended up doing what it was supposed to do. I took another entry at this bearish engulfing pattern. I now have across my moving averages, and I wrote it down to 1.2. I don't even remember, bro. I wrote it down though. My take profits got hit. Shit, I don't remember, bro. Zooming out. Yeah, we're up here. We caught some pips, bro. It's some pips. It's like 100 pip move. 100 plus pips.
Yeah, bro.
You know what I'm saying? 100 plus pips, 130 pips. But right now the market is a consolidation. The market is in consolidation. So you know, and you got to understand but that, no, my first take profit was at my negative 27%. My second take profit was at my negative 61%. So it's just all off of understanding, you know, where you're at, how your technicals are. And that's really it, bro. You got to understand yourself before anything else. You got to understand how you're seeing the market before anything else. You see what I'm saying? So other than that, I mean, what questions do y'all have?
Could you do like an analysis on AUD USD? Because that's like the pair. That's the only pair I try to mark up and backtest a lot, but I don't think I'll be backtesting that good.
Bro, when you think, like I tell Kay and Ossie, when you think you're not doing something right, that's when you fuck. That's the first step of fucking up. Is okay, I think I ain't doing this right. Then you gonna keep questioning yourself. Damn, am I doing this? Am I doing that? Then you gonna throw yourself off, bro. So go off of what you see and not what you think. You feel what I'm saying?
Oh yeah.
That's what confuses me, because I think 15 minutes ago you say it's all about how you think. You go off of what you think. And then now you say go off of what you see, not what you think.
When I'm saying go off of what you think, is going off of having enough confirmations to assume. Trading is a probabilities game. I'm not saying literally think like literal. I'm saying once you have enough confirmations to say, okay, I think the market is going to go here. You're going off of what you've seen to think that the market is going to go to there. You see what I'm saying? You got to think regardless. But I'm saying, like,
confirmations give you confidence.
Yeah, your confirmation is what's going to give you confidence, regardless of the fact nobody knows where the market is going. We can just assume, but you can't assume off of just your assumptions. You have to have valid confirmations, multiple confirmations from different time frames, transitions, you know, support.
How many confirmations do we need? Up to like 3? Because I hear a lot of people say you really don't need to
like
3 or 4
basically,
confirmations.
if you don't have confirmations off each time frame saying sell or buy, then you know what I'm saying, it's like using common sense, really. Like the more confirmations you have, the higher probability of that trade going into your favor, right?
Yeah.
So that's basically how it is. So when Jeremiah's teaching you top-down analysis, he's teaching you time frame correlation, he's teaching you support resistance, he's teaching you all the technicals you need. It's so you can have this many technicals, to this many reasons to buy or this many reasons to sell. That's when it's going off what you see and what you feel. Because if you have this many reasons to buy, this many reasons to sell, that's what you see. And then that's when confidence comes into place. And now it's not what you think. It's not, oh, I think it's going to go here. I think it's going to go there. You know where it's going to go through your segment.
Yeah, now you're thinking off of your confidence. Yeah, I
Exactly.
see.
Hold on. I'm putting some confirmations in the chat box so y'all can write this down. And if you don't know what confluence is just multiple confirmations at one time in order for you to. Confluence is multiple confirmations in one area in order to tie it all together. So
and another word for confirmations and confluence is reasons. Reasons why you're buying. Multiple reasons why you're selling.
Yeah, bro, that makes a lot of sense right there. The reasons.
So we all need to get like a list of confirmations to help build our trading plan, in a sense. That's the right term to use. But you pull from that and say if you have 6 confirmations, 4 out of 6 you take the trade, or if you don't have 4 out of 6, or at least 4 out of 6, then you don't take it.
Well, you want to have reasons. You want to have reasons why you're buying, reasons why you're selling. If you don't have any reasons, then why are you doing it? You know?
It's like rules,
Yeah, exactly. It's rules.
It's going to eventually get to the point to where you're going to already understand your confirmations. Like it's going to come to you, you know, second nature that, you know, I'm at a level of, you know, I'm at a monthly level of resistance. I have this. It's going to all tie together in order for you to, you know, take whatever setup that you're taking. So breaking down AUD USD, how I do it, bro, from top down analysis, I find my all this that I have marked off is basically just, you know, my monthly and weekly indecision levels. I'll send a YouTube video to the group chat on how I do that, but, you know, I'm not going to go into details to it right now. So I understand that, you know, my overall move, my overall momentum, my overall volatility is sellers are in the market from, you know, right here, lower low, lower high, lower low, lower high, lower low, lower high point. You know, we're at a low point. Understanding where I'm at in structure that's something major. So what did you know, what exactly did you want me to go over with AUD/USD?
Because you see on the day, you see how it made 2 lows at the bottom, but you just said that, you know, like and what I'm seeing too, like it's in a downtrend structure overall, like on a bigger time frame.
You need to be on a lower time frame. AUD/USD is a slow moving pair, so you really need to be on the 1 hour, 4 hour analyzing this setup. You see what I'm saying? You can base what you can do off of that daily time frame is go off of the volatility and the momentum. That's what you can base off the daily time frame. But trading AUD/USD, you're mainly on the 4 hour and the 1 hour time frame. And the reason I say that is because this is a slow moving pair. So as you can see, it gets choppy. It gets choppy, retrace, move, choppy, push, minor retrace, move. You know, it's a choppy pair, but truth be told, it moves a lot of pips. You just have to understand what's actually going on in the market. So I ended up taking this setup down where I got in at. I was on a lower time frame.
You see right there where it did. You see right there where it consolidated a little bit to the right, a little bit.
Right here.
Yeah.
You would have got confused right there.
I'm thinking it's gonna go down. I'm thinking that's like, you see how I did that push down on the left side, like aggressively down. I'm thinking that's where.
Okay, you saying what you saying is the market found support right here. We got a lower low, and you're assuming this is a lower high in order to take the market back down to the downside.
Yeah.
What confirmations did you have in this area?
See, that's the part. That's the part I didn't do right. I didn't
You
do
gotta
that.
have confirmations, bro. Look at the momentum. Look at the moving averages. Your moving averages goes off of your moving average, your average movement of the market. This told you right here, buyers are in control. Even when it went sideways, it never crossed. It said buyers are in control. We're not trying to push the market down. We got price rejection, price rejection, price rejection, price rejection, and we shot up, bro. You know what I'm saying? You ain't had no confirmations over here in this area to even say, you know, the market wanted to drop.
So basically the correction is what tells you what's going to happen. So the market moves in 3 ways: impulse, correction, continuation. How that correction is formed kind of tells you which way the market is going to go.
I don't base, you know, I don't use impulse correction. You know, I don't use what you just said. I just go off of understanding if the market is in an uptrend, downtrend, or sideways. And for me to understand that, I'm using time frame correlation. You know, it gets to a certain point to where certain stuff you learn, you're going to have to let some of that certain stuff go in order to make stuff simple. Because with you making it so hard, with you trying to use all these terms.
I understand where K is at now.
Huh?
I understand where K is at. Remember, we came from where we are trying to understand.
Yeah. But it's gonna be certain stuff that you're gonna have to let go in order for you to open up to get to that next level, in order to, you know, to be able to even elevate.
But do you need moving average? I hear a lot of people say, like,
no, you don't need any moving average.
You don't need moving averages, bro. You need to understand candlestick analysis. You need to understand market structure. You need to understand support and resistance. People say, oh, well, would you believe me if I told you support and resistance was bullshit? They say shit like that when in reality they're not even making no withdrawals. They have $50 accounts. When they make these good entries, they're trading off of 0.02 and shit like that, bro. They're not making no money off the shit. They doing these good entries for social media to make it look good, to show people.
Yeah. That's so true.
So right there, like, you know how you told me the buyers is that part where I said I was confused at. So without the moving averages, what confirmations you would have saw that told you the buyers still in control?
What confirmations that I would have had that said buyers are in control is these candles right here. 1, 2, 3, 4, 5. Add those 5 candles together. That is an engulfing pattern, bro.
Yeah.
That is a bullish engulfing pattern saying.
Oh, you right, bro. You right.
And then we had the retest. Look, it came up and retested.
Yeah, look. Now look, for instance, I'm gonna break this down. And
You right.
I wasn't even trading AUD USD. Usually this is a pair I trade, but I wasn't trading it. I was trading GU and UJ throughout the week. So understanding I have these confirmations right here, what I could do is drop to the lower time frame. Go into the lower time frame. And I'm gonna show you. You got that bullish variation. Now let's see, where can I find some? Hold on. You got the bullish variation, and just paying attention to candlestick analysis.
Ain't that one right there? That right there, that engulfing right there.
Look at the movement. I mean, look at the overall. That could have been a setup, bro. That could have been a setup.
Mm-hmm.
But look at you end up getting a cross. You end up getting a cross of your moving averages right here. So you got red over blue now. But if you were not using your moving averages, this is what I'll do, bro. I'm gonna take those off so we can stop. So you don't think you mainly need moving averages. That would have been a setup right here, simply because look to your left. This is a bearish candle. Add this all together. What is that? You got a bearish, you got a bullish variation or a engulfing. So you could have took entry right there. You're right, bro. You could have took entry right there, or you could have took, you know, if you were more of a trader that's like, well, shit, that was a good setup right here, bro. Like, no lie, that was a good setup. With you noticing that was a good setup. That was dope.
Mm-hmm.
You could have.
What about right there? Right there, you said right there. You had your a little bit to the left. Right there. Those are indecisions or those pin bars?
Right here. These are pin bars.
Pin bar.
These are pin bars.
Oh, okay.
These are price rejection candles. Price is rejecting this level of support right here. You see where I have it at?
Yeah, so those are not dojis. Those so for it to be a doji, the body has to, the wick has to be a little bit longer at the top.
Bro, always understand that dojis are just neutral candles. Whenever you get dojis, that just means the market is indecisive on where it wants to go. You see what I'm saying? So the reason I end up drawing this, and this falls back to drawing levels of support and resistance on the lower time frames, bro. Just having extra confirmations. Look, it's a level of resistance right here, support, rejection. You see what I'm saying?
But what about that line? You got two lines right there.
But the only reason I had two lines right there is because, remember, off of my 4-hour time frame that we're basing this, we seen.
Oh, that's just giving you like an area where.
This is showing me that all this right here is buyers in control. You see what I'm saying? All this is buyers in control, because remember I told you I'm tying all this together in order for this to be a big variation for me to take the market up to the upside. That's what I could have done. You see what I'm saying? I could have done that in order to say, okay, buyers are in control. I could have took entry for a buy, take it up to the next level of, my monthly level of resistance, which is probably like.
But that line is there because of that close of that.
That's the only reason that line is there.
Because of the open of that bear candle and it went above that open.
Yes, that's the only reason that line is there.
Oh, okay.
That's just using confirmation. That's using my indecision levels to my advantage. You see what I'm saying? That's just like with me doing this right here. I have that open of that bullish candle, and I could have did something like that. So all that's showing me is, all this right here is sellers in the market. That's
and then on lower time frame, you zoom in to see the actual lower time frame support or resistance.
No, on a lower time frame, I'm looking for the transition.
Yeah. But you also like how you said on the lower time frame, that also goes back to like support and resistance on the lower time frames. You would just adjust it.
This is how I took this setup right here, bro. You see how I just drew that level of that level of indecision right there?
Yeah.
I took entry right here, bro. But I got in on the lower time frame. I ain't gonna stun. I got in on the lower time frame, but it was in this area. So I could drop to, I believe I probably took entry on M5. That it just falls back to using everything to your advantage. Like, the market tells us what it's gonna do before it even does anything. Look, this is where I end up taking entry for, and where I have this blue zone at down here, that's where I took profits. This is where
bro, you take your profits, bro. Damn, it, that should feel good, man.
bro, you don't understand how much losses I took. That's what it sounds sweet. It sounds good, but you don't understand how many losses we took to get to even be to the point to breaking this shit down like this. I took entry off this bearish candle close. I already had it marked off. You see what I'm saying? So once I took entry, I just let the market move. I just let it go. It went into some type of consolidation, and then my take profit got hit. Once my take profit got hit, price automatically got rejected. So when
you say you took a lot, you're talking about like you
bro,
now taking a lot, or you talking about before when you were studying?
I took losses, bro, before this shit. Is Ghost on here? Where he at? I know he on here, bro. He gotta be. Yeah, ask Brennan, bro. We started trading together. That's why I tell Afi and Kay, like, once you learn to be able to think in a certain way, just go off of what the market tells you, then you're gonna be good. But shit,
you helped me a lot. It's 'cause I've been blowing my account, bro. You helped me a lot. Cause I used to like,
bro. Last time I ain't blown no account in like over a year. But shit, Ghost. It was a time, bro. I loaded like $1,100 or $1,200 in my account, bro.
Oh,
literally that same day, I lost like my whole account, bro.
No, man,
my whole account. You know what I'm saying? Then you gonna get numb to the losses, bro. Like if you trading off of emotions, then you know shit, you gonna get what you asked for, bro. You gonna get some emotions.
Take a loss to be a boss.
Hopefully you keep doing these. I want to keep attention because I got like IML and I be going on to like they're like I don't know if you know about IML. Are you?
Bro, don't even.
Boy, don't even call that name up in here.
I be in that, but I was in that for like
no. Come on,
like
come on.
4 months, but I'm still confused.
No.
I'm like, man.
No, come on.
But now that I got on here, I'm like, bro, this dude know what he's talking about. I'm like, this dude
Stop your subscription. It don't make no sense because I tell you, I was there for so long. Oh my God, this recording. You'll have to cut out this part, Jeremiah.
Man, before I start training with Afi, like
I didn't know nothing,
bro. Like I literally only been training with her for like 2 weeks going on, damn near 2 weeks, bro. I mean, when she first joined the group, I just sent you the link to the group chat today, Paul JP, because I was, I'm working from my Instagram page. I'm building, I'm networking. So with you to be able to see that, when you join my group and, when the message that I'm sending out saying I do free trainings, you understand what I'm talking about, bro. You understand everything that I'm saying in order for you to be able to process it and use it. You see what I'm saying?
Yeah, it's like I understand. I understand structure, So I just need to like you just said.
I know where you at right now because that's where I was at, and I had to unlearn everything and say, okay, Jeremiah, start from scratch, and I just delete all those chats, and I just have 2 like goals and Jeremiah chat. That's all I've been following, and it's making sense now because
I am just like a sign from God because my parents are giving me like $1,900 something. And I'm like, man, I do not want to blow this. And then
no, you don't.
It's a process, bro. It's not something that you're gonna just jump in and get rich quick. It's not. It's not that, bro. It's something that this shit gonna teach you how to understand yourself. It's gonna teach you. It's gonna show you if you really impatient, if you really undisciplined. This shit will show you that. And with it showing you that, you're gonna either have to adjust to it or you're gonna continue to lose money. You pick.
You have to do. Start your foundation.
I'm gonna trade it. I already told myself do demo until I see results on demo.
No, bro, no trade live, bro. Demo don't do nothing. All these traders, bro. No, bro. All these traders say trade demo. IML. Even bro. So many people say trade demo. When truth be told, when you trade demo, bro, you putting these high ass lot sizes. When on your real account, you be damned if you put a high ass lot size like that, because you're gonna blow your account if you lose. Demo. You don't care. You don't care about that demo money. It's demo. It's fake. Trade with real money. With that money that you finna get, low shit, $400 in your account. You could turn. Ask Ghost. I turned a $400 account to like $2,000. $2,300 or some shit like that, like smaller.
Like a month's time or like how?
No, like in like
Wow.
4 days.
4
Mhm.
days.
Yes,
Yeah.
But
I
like
tell
you're
you,
risking
stuff is
like 3% of your account every time. or
no,
something?
bro. When you understand what's going on in the market, it's either you gonna take a risk and drop your nuts, or you gonna sit there and watch the market go in the direction that you thought it was gonna go in. You pick your poison. You pick what you want.
Oh, okay. So it's up to you how much you want to risk, but it's like how you said, drop some big boy lots when you see your setup.
Yeah. That's exactly what I'm saying. But you gotta always understand, and you gotta accept your risk before anything else. And when I say accept your risk, don't be mad when you lose. When you thinking in your head, yeah, all right, bet this is my setup. I'm gonna go ahead and put a standard lot on here. I'm willing to risk $200, which is 20 pips. Okay, I'm gonna risk this, and then when the market shit hit your 20 pip stop loss, all you can do is go back and back test it, bro. You can't get mad at it, because once you accept your risk, you understand this is what I was willing to lose. Okay, but you gotta always have like a 3-to-1 take profit. So if your stop loss is 20 pips, your take profit should be 60 pips. So you're risking losing $200 to make $600 or $800 or $1,000. You see what I'm saying? You got to understand your risk, bro.
But as soon as you start going in profit, do you just move your stop loss in profit or break even?
No. Keep your stop loss where it's at, bro. Because as soon as you do some shit like that, saying, all right, bet I'm finna move my stop loss. When you're going for a move, bro, the market has to retrace, bro. Like, it got to retrace. It ain't no question about it. The market has to retrace. So, say, for instance, say you took entry right here. And then you like, all right, bet. Your stop loss was set like below here, but you like, all right, bet I'm going to move my stop loss in profit. Bro, the market still got to retrace. So the market might be pulling up, then that whole got to boom, boom. And the market might come back and form a new low at this level of support right here. And you done got stopped out, but truth be told, the market still finna form a new higher high. So all that moving your take profit, your stop loss into take profit, but that's a process that you got to grow through. That ain't just because you see people doing that shit on, Instagram and whatever it is that they doing it on. They probably got.
Bro, I think it's true, like you saying. I don't like all that other shit. Like it confuses people.
yeah, because I think because they don't know what they're doing. They
This
just like
webinar finna end in like 1 minute. This webinar finna end in like 1 minute. We could start over again. Just if you want to jump on a webinar, just private message